Understanding and completing the mortgage pre-approval process can give you a leg up on other home buyers who haven't done their research. Potential buyers should always complete the mortgage pre-approval process before house hunting. Visiting open houses and stuff on the weekends is exciting and fun, but serious buyers need to start looking at homes with a pre-approval from a lender first. A pre-approval is important for a few reasons. First, it shows the buyer the maximum amount that they can take out a loan for with their current income, assets, and liabilities. Secondly, most sellers will only negotiate with buyers who have already completed the mortgage pre-approval process, since it shows the seller that the buyer is serious about finding a home and can quickly see if the buyer is qualified to even buy the seller's home. And finally, going through the pre-approval process will notify the buyer if there are any red flags with their credit score. This is a good thing to know earlier rather than when you've already found a home and then you can't qualify for it. So this is not a list of every single process because everyone's situation is different. But these are some key important items that are considered in a lender's pre-approval process. Number 1, your income and assets. Providing proof of income documents is more than just writing down your monthly income on a line. Buyers need to provide at least 30 days of pay stubs that show the year-to-date income on that same document. Additionally, buyers may need to provide the last 2 years of federal tax returns or tax transcripts. Next, buyers need to show at least 60 days of asset accounts. This includes your checking, savings, and investment accounts. Finally, buyers need to show at least 2 years of W-2s. Be prepared to show any additional forms of income, such as alimony or bonuses that may affect your income. For monetary gifts, buyers should also have a signed gift letter from the person who gifted them the money. Lenders will also need to see the source of those funds from the person gifting them as well. The lender will then analyze that income to determine what your debt-to-income ratio is, meaning what percentage of your income is used to pay all of your debts. Number 2 is your credit score. Lenders typically reserve the lowest rates for buyers who have a 740 plus score or higher. Buyers with a lower score than 740 may have to pay a little bit more in interest or can pay discount points to lower their rate. Most lenders require at least a 620 score from all buying parties to secure a 3.5% down payment for FHA loans. Buyers with lower scores, like in the 500s, will probably have to put down a higher percentage when purchasing their home. So this is where it's good for buyers to see what their credit score is and if there's any red flags that bring it down. Lenders are going to pull all 3 credit bureaus to get a median score. Sometimes things are only on one credit report and not on the others, which may account for a difference in scores. Most lenders will advise buyers on how to increase their score over time to get a better rate on their loan. And buyers can get a free copy of their annual credit reports at annualcreditreport.com every year. This is a way to check your credit without it appearing as a credit check inquiry on your credit report. While you will have to pay a fee to get your scores, it's still a good step to take even before starting the home buying process, so there's no surprises on your reports. Number 3 is employment. The lenders want to see if buyers are currently employed with the company that they provided their W-2s. Lenders will typically call the buyer's employer to verify employment and salary as part of the mortgage approval process. Lenders want to be sure that they are loaning to buyers with a stable work history. And buyers who change jobs multiple times in the last 2 years may require the lender to call previous companies to also ensure proof of employment along with the previous salary. Self-employed buyers will need to provide multiple other documents to their lender. All of this is done before any pre-approval is given. So the quicker you get the requested documents to your lender, the smoother your process is going to be. Your pre-approval is typically valid for 90 to 120 days to ensure that buyers are serious about buying a home. Once you have your approval, now you can accurately search for your next home. So don't forget, once you've been approved, Do not quit your job. Do not go out and charge any large purchases or open up any new credit accounts until after you have closed on your new home. Doing these things will definitely jeopardize your chances of a smooth closing experience. So feel free to reach out to me for your pre-approval before you go searching for homes.